Welcome to the Northaven Market Wrap for the month of July 2017. Well, it's been an interesting month with the share market rising by only 9 points, which in percentage terms represents a return of 0%. This flat composite performance masks some fairly mixed results between individual companies and sectors within the market. One of the critical developments announced during the month was the Australian Prudential Regulation Authority's announcement of the new bank capital requirements. There had been a degree of trepidation in markets ahead of the announcement, with some analysts predicting that banks would be forced to issue discounted share purchase plans in order to raise equity capital. These rumours had been weighing on bank stock prices in recent months. As it transpired, the new core Tier 1 target of 11% is well within reach of the big four banks. In fact, ANZ is already there, and the other banks have some fairly easy and moderate steps to take in order to get to those levels. APRA's announcement relieves pressure on banks to cut dividends, and it also draws a line in the sand in terms of capital requirements moving forward. This removes one key area of uncertainty surrounding the banks, which foreign investors in particular had been quite nervous about. The banks finished the month's trading up slightly in response to these announcements. Bigger positive movements were recorded by resource companies, which benefited from an increase in faith surrounding the trajectory of the Chinese economy. BHP was one of the key beneficiaries of this movement and rose over 11% during the month. This was despite a fairly strong currency headwind, as US dollar weakness saw the Aussie dollar finish the month back above 80 cents for the first time in 2 years. Amongst other large cap stocks, Telstra and CSL both had months that they would rather forget. Telstra was back almost at $4 and fell by almost 5% during the month. CSL fared a bit worse, although it had risen very strongly in recent months, but CSL ended the month down over 8%. Market news in the month ahead will be dominated by company results as we enter the reporting season. Early results have not been overly inspiring, although there have been some very strong results from resource companies, which have been cycling some very low returns from the corresponding period last year. We do expect that the reporting season will uncover some opportunities in pockets of the market where value is a bit more evident.